Are you covered for a rainy day? If something unexpected happens, do you have sufficient insurance to cover those expenses? In this F&B consumer education video, we will talk about short-term and long-term insurance and why it is important that you have the right insurance cover.
Insurance is one of the ways that you can protect yourself from financial loss. You can insure a person, property or things that you own. When you take out an insurance policy with an insurance provider, you are paying for cover against any potential financial loss.
Insurance products can be complex and confusing. There are tons of technical terms. Let's take a moment to define a few important concepts.
The first concept that we need to look at is cover. Cover is the guaranteed value the insurance company will pay out in the case of an insured event. When you are looking at life insurance, you will sometimes use the word benefit instead of cover. Beneficiary, on the other hand, is the person or people you nominate a life policy to in the event that a claim gets paid out. Premium is the amount an insurance company charges you for an insurance policy. You'll usually be charged a premium once a month and may also have the option to pay a full year's premium at the beginning of each year. Then, an exclusion is something that is left out and not covered by an insurance company. For example, money in your purse is not covered in the event that your purse is stolen.
Insurance is also tailored to various and specific needs, and that is why you will find insurance products for short-term and long-term cover. Short-term insurance protects you from financial loss in the event of the loss or damage to your belongings. Some examples of short-term insurance would be motor insurance, household contents insurance, homeowners insurance, or cell phone insurance. All these examples will cover you in the event of damage or loss.
Long-term insurance protects you or your family from financial loss if a life-changing event occurs, for example, death or disability. Examples of long-term insurance would be health policies, retrenchment cover, credit life cover, disability cover, and critical illness cover. Both short-term and long-term insurance ensures that you are financially protected for those unforeseen events.
However, having insurance may not always be your choice.
For example, Darshni here just bought a new car. Congratulations, Darshni. The financial provider that lent her the money to buy the car would only do so if she got insurance on the car first. This type of insurance is known as compulsory insurance. When you have the choice to insure the item, you refer to it as optional insurance. For example, when you take out a new cell phone contract that comes with a phone, you are offered the option to add insurance, which means that it's also added to your monthly installment. You can choose not to take out this type of insurance.
Let's dig a little deeper into some of the long-term insurance policies or cover that is available on the market.
A health policy pays out when a covered event relating to your health happens. It is important to know that a health policy is not a medical aid. A medical aid covers specific medical expenses and treatments. A health policy pays out an amount that you can use for any accepted medical reason. Examples of health policies include health cash policies for non-medical expense cover due to hospitalization, gap cover, which covers medical expense shortfalls.
Retrenchment cover protects you against financial losses as a result of retrenchment. It usually provides you with a specified amount for up to 6 months or until you find a new job.
Credit life cover pays for any outstanding debt when you die or become disabled and can no longer work. Often, when people take out credit or a loan, for example a home loan or vehicle finance, they are asked if they would like to opt in for credit life. So, should they die, the remaining debt for that loan will be settled by the credit life cover.
Remember to always check with the person assisting you with the credit or loan if credit life is already included or if it is optional. Then you can decide what the best option is for you to ensure that your debt is covered and that you aren't paying more on credit life than you should be.
It is also good to note that even if credit life insurance is mandatory, you still have the option to shop around and buy credit life from your own selected insurer. You don't have to take up the credit provider's credit life product.
Excellent point, Esther. Critical illness cover pays you a lump sum should you be diagnosed with a critical illness. It helps you cover unforeseen expenses which can arise with certain serious illnesses such as paying for medical specialists, high treatment costs, 24/7 care, or any other lifestyle adjustments you may need.
Disability cover protects your income if you become disabled or cannot work again because of disability. There are two types of disability income. The first one is lump sum, which pays out a single payment, and income protector, which pays out monthly.
Wow, that's a lot to consider, Esther. One thing that has always confused me is the difference between funeral cover and life cover. Are they the same thing or are they different?
Excellent question. I'm sure there's a lot of people out there that have the same questions about this one. A funeral policy is a type of insurance which will cover burial costs when someone that is covered by the policy passes away. The main benefit is that because we don't know when death will happen, we can't plan for it. So it's very helpful to not have to stress about funeral costs when death occurs. The payout is usually within 48 hours to allow the funeral arrangements to happen. This is for the immediate expenses after someone passes on. A life policy is a type of insurance that provides for the needs of the remaining families in the case of the death of a policyholder. The benefit is that it helps to provide for the financial needs of those that you leave behind, so that they're not left struggling when you are no longer there to provide for them. Examples of these needs can be school fees, groceries, paying off any debt that there may be. Life cover usually has a higher cover amount than funeral cover and sometimes takes a little longer to pay out.
Okay, so funeral cover is just for the costs of a funeral, and life cover helps the family or people left behind beyond the funeral costs.
Exactly. Although life cover premiums may be higher compared to funeral cover premiums, the value of the life cover payout is much higher. So we have spoken a lot about the different types of insurance. Let's chat about how we go about getting insurance. The basic steps to getting insurance cover are the following. Consider the type of protection you need. Seek advice from a registered financial advisor on how much protection you need. Determine how much you can afford. Contact insurance providers and then shop around for the best options for you.
Let's make these steps practical. Esther feels that she needs insurance, so her first step is to consider what cover she needs. Her biggest fear is being robbed, as the crime rate in her neighborhood has increased over the past few months. She seeks advice from a registered financial advisor to determine what and how much cover she needs. She decides that she requires household insurance and also considers the high-value items that she needs to cover in her house, as they would be too expensive for her to replace. Esther's next step is to determine how much she can afford to pay towards premiums, or what the value of the insurance cover would need to be. She estimates how much the value of the items she wants to insure are to come to the final amount of what her cover needs to be. Once she has all this information, she contacts an insurance provider or registered financial advisor to get more information on the different types of policies available. She asks for quotes, makes sure she understands the monthly premium and other costs that she may have to pay when making a claim. She asks the insurance provider or advisor to explain the terms and conditions to her so that she understands them before she signs the quote. She also makes sure that the insurance provider is registered with the Financial Sector Conduct Authority. Finally, she shops around for the best option, collecting all the information that she needs from various financial providers so that she can make an informed decision on which product best suits her needs.
It really is important to take careful consideration before buying insurance to make sure that you have the right cover for your needs. We hope that this video was useful to you, and we look forward to seeing you for the next installment of the Financial Education course.